Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Thursday, the 27th of June. Starting off with the S&P, which remains in a steady-as-she-goes type of mode. We're above the top of that gap there, 54.10, and while we're above that, looking for fresh highs, perhaps as high as the top of that rising September trend channel, 5,700 by the end of next month. On the downside, worst we're expecting is probably the old resistance area and recent support around 53.50, but ideally we stay above 5,400 and the latest gap top. Moving on to the Nasdaq, and here we are hugging the floor of that rising trend channel there, currently around 19,600, and above that, looking for the top of that steeper April rising trend channel, 20,900, hopefully by the end of next month. There is obviously the resistance there from the September resistance line projection, 20,100, but the way the market is currently shaping up, it looks as though it will be able to clear that. If we do break down, the worst that's expected is the floor of the last gap at 19,200. Moving on to the stocks, and we start with quite a fiery situation in the form of a new medical, and here you can see that we're in this falling trend channel that's been in place since March, but we've had a bear trap island reversal. One of the strongest setups, actually, because obviously the bears caught out with the latest gap higher. What we'd like to see, though, is an end-of-day close back above the old April support there, around $5. If we can do that, then we could have a recovery up to the $8 area, which was basically May, June resistance for the shares. What we don't want to see, really, is any price action back below the floor of the recent gap around $2.20, but ideally the support comes in on the right side of $3. Moving on to another slightly less fraught situation, and that's in the form of Baijian Group. And we looked at this before, and obviously it hasn't really improved since the last time we looked at it. But here you can see potential U-shaped turnaround for the shares. Recent neckline resistance around the $3 mark, and above that looking for the $5 mark at the 50-day moving average, hopefully over the next couple of weeks, if this is that U-shaped turnaround that we're looking for. CareMax is next, and here the price action within a broadening triangle base, quite a tight one I suppose, but here you can see that that's been running since April. We've managed to push through the 50-day line at $3 in quite a strong way, and the assumption now is that while we're above that, we can head up to $5 again over the next couple of weeks. Next up is a stock we haven't looked at before, Diamedica, and here classic bear trap gap reversal, so going to new lows and then gapping up quite sharply. The view at this stage is that while we're above yesterday's $2.50 support, we could see the shares head to the top of that broadening triangle from back in December as high as $4 by the end of next month. The fact that the 50-day line is now curling up nicely is also helping the cause. On to UDA, and here one of the stronger charts that we're looking at today, or the strongest perhaps, rising trend channel there from the end of the year, top of the channel there, heading for $4.80. We're looking for that over the next couple of weeks, especially while we remain above the recent resistance around $3.30 on an end-of-day close basis. But the upside valid while we hold above the floor of the channel there around $2.75. On to GameStop, where the trail seems to have gone a bit cold, but we still have that uptrend line there from back in April. The nominal level there around $23.20. Probably one would allow, if you're a bull, down to the 50-day line, $21.50, and it's impressive that we haven't needed to test that particular feature since back at the beginning of May, which is quite an achievement given the way that we've had a roller coaster since then. If you're looking for a momentum trigger, then I suppose an end-of-day close through $26 would be the key there, but otherwise any dips towards that 50-day line currently still a buying opportunity on a technical basis. On to Nvidia, where the rug was pulled quite recently, but it's quite encouraging that we managed to find support at the initial June support area around $117. Probably what we'd like to see now is more price action well above the $120 area to then give us a chance of retesting the best levels, or the record levels, up to $143 by the end of next month, with the key here staying above that 120 handle. Moving on to Syntec, and here a massive move within a broadening triangle which has been in place since the turn of the year. The view here is that we'd like to see the shares on their current retracement not fall any lower than the 50-day line, currently around $3.10. If we can do that, then we can expect another attempt at hitting the top of that triangle at $8 plus over the next 4 to 6 weeks. The next stock on the roster is Singular Genomics, and here we've got a triangle break, well, a falling wedge breakout through $10 above that, looking for the top of the triangle there from back in April, as high as $16 by the end of next month. If you're cautious, you should be looking for an end-of-day close above the 50-day line at $11.40. We're already backed by bullish divergence in the RSI window, so multiple uptrend points there, and obviously yesterday's key reversal to the upside. TRX8 is a stock we'd look at on a relatively frequent basis, but this could be the one in the sense that we've got what looks to be a classic cup and handle turnaround there, with a handle breakout just happening at the moment through $11.30. Above that, we're looking for $18 by the end of next month or even sooner, and we're actually probably looking for much more than that given how strong that cup and handle setup currently looks. Only back below $8, really delaying the upside scenario there. Moving on to another stock which has potential on the upside, Tough Built Industries, and here we've got a saucer-shaped turnaround, not too different from the previous chart, but the handle breakout here on the right-hand side through $5.30. Above that, looking for $10 by the end of next month, and looking at that or for that with a lot of confidence at the moment. Ideally, we stay on the right side of yesterday's support around 420 on an end-of-day close basis. Finishing off with Technoglass, and here bear trap gap reversal, one of my favorite setups. Ideally, we stay above recent resistance on the way down around $47 and head up to the top of the channel there as high as $60 plus by the end of next month. Maybe we'd scrape up to the $62 level. Once again, if you're cautious, maybe you'd look for an end-of-day close back above the 50-day line at $51, but $51.80, but that would be giving away some of the upside. The other point to note is that this is an island bear trap reversal, because we did gap down and then gap up, so that makes the setup all the more strong. That's it from me today. More updates tomorrow.